I want to talk about a lot of things. Alistair asked me to talk about 2019 and what we anticipate seeing next year. 2018 really was characterized by one concept, and that it's never been a better time to buy. And so if you think about the end of 2017 and how it funneled into 2018, 2018 has been a great year, and I think that everybody in this room has benefited from the market and what we've seen this year. With 2019, what is it going to be characterized by? And we've been sort of thinking about this at our shop for the last couple of weeks and just really wondering, and frankly, we don't know. But I want to talk about a lot of things that we see in trends that are happening and what we anticipate are going to be some of the key issues that are going to face us in 2019. Over the next couple of days, you're going to see some really dazzling metrics. Last night, Johnny Foster sent this to me, and I thought it was really important because, over the next couple of days, I really want you to focus on the metrics as they go up on the board, because we're going to get a lot of really good information, and I'm sure Alistair is going to have all of this on his website later this week. In terms of a crystal ball, we're going to talk about key trends and some important questions, and so let's really focus on the first thing, which we think is going to happen in 2019, which is going to be a year characterized by increased M&A. Given what's going on in the public markets, we anticipate that there's going to be a pretty good consolidation. We think that there's a lot of cash on the sidelines looking for opportunities, and interest rates are low. They're increasing, but they're still low relative to all-time highs. And so I think that from the standpoint of M&A activity, 2019 will continue what we've seen in 2018. I think with sellers, they're seeing relatively strong multiples and valuations are pretty high. I think that in the services side of the business, there are a lot of principals who are at that point in their career where it's time to transition. And so looking at the timeline and what we anticipate happening in the future, I think that there are a lot of folks that will say that now's the time to take some chips off the table. So wanted to talk about a couple of announcements. There's two announcements we're going to make today that this is the first time that's really been published. Corporate Jet Investor is going to be acquired in Q1 of 2019. Alistair had shared with me earlier that he plans to take basically 2019 off, and so we'll see him next year in Miami, a new and improved Alistair White. So I don't know who's more excited about this, Lou or Alistair. So. Another announcement, and this is real. The first one was not real. We think that Textron is going to acquire Aerion. Obviously, those two products mix well together. We've got a first-time released picture of the new Textron supersonic business jet. If you don't get it, ask the person sitting next to you. But we think that that would just be exciting to see Textron owning Aerion. And then Wheels Up. I think that Wheels Up, Kenny has done a really good job of marketing, and he's really figuring it out. True to his business plan, they're bringing business jets to the masses. And you may have seen the most recent ad in Costco. So I don't know about you, but when it goes back to Christmas shopping, my kids get little books from Target and things like that, and they circle things that they want. Thanks to Kenny, I've got 3 circles around this corporate jet card, and but I think next year Wheels Up is going to really take it up a notch, and I've seen a little bit of next year's marketing campaign, Kenny. So this is a whole new level. Yeah. If I show this picture in London, how will that go? Now let's talk about some important things, though. Can the carpet market keep its momentum, and is now the right time to be selling new aircraft? Let's talk a little bit about market momentum. I think that when you look at the market, we look at headwinds and tailwinds, and right now there's some tailwinds that are still prevalent in the market. I think tax reform is still working. I think that there are a lot of buyers who are looking right now, meeting with tax advisors and saying, can I get an airplane bought before the end of the year? And it's going to be really hard to do. And if that happens, there are going to be some trade-offs that happen between now and the end of the year. But I think that is going to continue into 2019. The benefits of 100% accelerated depreciation are far too great. And if you have a liquidity event and you can deduct 10, 20, 30, $40 million, that is a big deal. And so our clients take notice of that regularly, and that's a common topic of conversation. I think that if you look at pre-owned and new pricing, while we have seen some buoyancy in the market, if you look at it relative to historical norms, we're still at a relatively low point. So a $13 or $14 million Falcon 2000 LX is still a great value. A $19 or $22 million G550 pre-owned is a great value. And if you look at those airplanes relative to new pricing, there's still opportunity there. But we do have some headwinds. Inventory, if anybody's been in the market recently, you know that inventory is tough to come by, especially good aircraft, and it's really a bifurcated market. You know, it tends to be a world of have and have-nots, and so the airplanes that are good, solid airplanes with good pedigrees sell very quickly. We had a G450 this year that literally came to market, and that day we had 5 offers on the airplane. However, there are some airplanes that still languish, and so if there's a questionable pedigree, if the airplane is operated internationally in areas that aren't common places for operations, if there's a non-standard interior, those airplanes still languish on the market. I think in 2019, MRO availability is going to be a problem. If I could go long on any stocks right now, it would be specifically stocks of MROs. Most of those companies are private, but the point of it is that there's just a ton of activity that's going on. And I don't know about you, but 5 years ago when we would take an airplane to an MRO facility, the bill coming out was $500,000 to $700,000. And that was paint and soft goods and some avionics updates. And recently it feels like that every time we come out of an MRO, it's $1.5 million to $2 million. And so there's an impact there that we're seeing that is going to continue to bog the market down, we think, in 19. I think that the dollar being strong is going to impact international markets. I talked about this before, and so I won't reiterate it, but if you're a foreign buyer of U.S. dollar-denominated assets, the dollar plays a big role in how you perceive the value of what you're buying. And so I think that the strong dollar will continue to suppress international activity. I think that infrastructure costs are continuing to increase, maintenance costs are going up, and small things like crew compensation. And if you operate a management company in here, you are seeing that the cost of pilots is going up. And I'm not talking $5,000 or $10,000. I'm talking 20, 25%. And it's across the board. It's from the West Coast to the East Coast. And it's making it really hard, especially for smaller aircraft types and charter operators and air ambulance businesses, to keep good talent. It's an almost impossible task. We've actually had one client who sold 2 airplanes this year because the cost of the crew. And they just said, screw it, we're not going to mess with it anymore. And so it benefited, in that case, FlexJet. But the point is that the owners are beginning to look at those costs relative to the overall cost of ownership. I think that the U.S. political discourse is only going to be more antagonistic over 2019. And we've already seen, the 2020 presidential elections already started. And I think over the next year, and we're going to get tired of the news that's going on in the market. And I think that it's going to have an impact. It's just going to continue to chip away at confidence, and I think it's going to be a problem. And I don't think it's going to happen in first or second quarter of 19, but I think by the end of next year, this political campaigning that we see and this right-wing, left-wing, Republican, Democratic warfare that's going on is going to impact the business world. And I think interest rates are optically going to have an issue. All the bankers in here, are thinking about interest rates and what's going on, and I think that it's something that we looked at really carefully, and so we did some analysis. If you look at the federal funds rate right now, it's a little bit above 2%. Over the next year, they anticipate 4 more rate hikes. It's going to move the fund rate up to about 3.25% to 3.5%, and so the perception of that, I think, is worse than what it really is. We did some more research, and we looked back over the last 20 years, back to 1990, and we looked at the correlation between the blue line on this is interest rates, and the black line is number of transactions per month. And there's absolutely zero correlation between the two. And in fact, if you look at the period kind of I'm sorry, 2001 to 2008, you can see that as interest rates went up, so did the number of transactions. So we don't think that there's any correlation there. I think that it's more optics than anything else, but I think that combined with some of the other factors that we're going to see next year, it's going to have downward pressure on the market. So the official guidance is more headwinds than tailwinds next year. I think also that we'll probably continue to see modest price recovery. I think in certain models, we've already seen 10 to 15% increases in pricing off the lows, which that's good. I think that benefits the owners. Anybody who's invested in airplanes, that's good. So the banks are in better position, the owners are in better positions. But I think we'll see a lower transaction volume in 2019. I think most of the impacts are going to be structural. I think if you look at available inventory, you look at MRO availability, those types of things are structural limitations of our marketplace that are going to impact us next year. And I think that there are also going to be some optics issues with the politics and what's going on in the U.S. and interest rates. So I don't think 2019 is going to be a bad year, but I do think that we just need to be prepared for just a slowdown in what we've seen. And so from an OEM perspective, I want to talk a little bit about what we see there. The U.S. market, we still believe that pent-up demand exists. There are a lot of public companies that haven't made the upgrades that they need to make, and they're still flying around in airplanes that they would have normally rotated out of. In the pre-owned world, there's limited pre-owned inventory, especially turnkey, and so that's going to point more buyers towards new. Anecdotally, I think everybody in here has had buyers who started the process thinking about pre-owned, and then they've converted to new orders. And so I think that that's going to benefit the OEMs marginally. I think from an international market, and if you look back at history, most of the huge increases and spikes of deliveries have come because of the international market. I think that the strong dollar is going to have a negative impact there. And I think that with international sales, we're going to continue to see slow but measured increases globally. I do believe that some of the new entrants, the Global 7500, the G600, 500, and the Proctor 600 and 500, I think these are all great airplanes. They're going to have an impact to the market. I think that's going to be a positive one. I think that's going to generate activity. I don't know if that activity is going to convert into sales. But it's really impressive to see what's going on, especially in that super midsize and up category. I think that the pre-owned to new spread will remain large. And what we mean by that is, again, if it's $40X million to buy a new G550 or a new Global 6000, or $50+ million to buy a 6500, and you can buy an equivalent airplane pre-owned in the high 20s, low 30s, the value-conscious investor is going to look at that and say, maybe I'll buy pre-owned. Now, if there are three options available and one has a pink and purple interior, probably not. And that's going to push someone to new. But that conversation is still happening more and more than it's ever happened in the history since we've been in business. If I were an OEM, I would think of 2019 as a year to build backlog, focusing really on trying to, especially with the new entrants in the market, building market share. I'm not going to tell the OEMs how to do their business. I mean, they're much smarter at that than we are. But I would work on backlog and market share, and I think that in the future it would be a time to work on margin. There's still enough competition from the pre-owned market. I think it's going to continue through 2019, where build the backlog now, build market share, and then work on margin later. So in summary, more headwinds than tailwinds. I'm still confident about 2019, but I do think that there are going to be some structural issues that are going to hold us back a little bit. I think we'll see modest price recovery. I think that's going to be a good thing, but definitely lower transaction volume. And I think OEMs should focus on backlog. Winners, again, going long, MROs are going to have a fantastic 2019. I think that Alistair is going to have a great 2019, and Lou's going to have an even better one. And but anyway, that's all I've got, and hope this has been insightful. Thank you, Kenny.
Lack of inventory next year.
Right now, we've got 5 active acquisition engagements, and it's in every one, it's very hard to find inventory.
So the audience has voted. 53% say politics is what worries them the most. Does Trump not deserve some credit for how important? We've seen this market has been great. The last year has been phenomenal for pre-owned sales. How much of that is thanks to Donald Trump?
I mean, Trump does a really good job of screwing up really good things that he does. And so you can't discount the fact that his policies have been positive. And I think that the environment that he's created in terms of trying to take the handcuffs off of the U.S. businessman, the entrepreneur, has been fantastic. And so I think that there's a lot of positive there. But I think part of it is that I think there's a couple of other trends though that we've been seeing where the cycle of replacement had been delayed for a long time, and I think that was a structural issue. And so I think that there was a ton of pent-up demand in 2017, 2018, and I think that interest rates being low, and I think available inventory and pricing being at the lowest point in the history of business jets, kind of all combined, and helped us all in 2018.
Hey, Brian, James Person from Viasat. One of the first things you talked about is M&A activity coming up in 2019. Were you thinking just OEMs there, or are you thinking other parts of the market as well?
I don't know how much we'll see with the OEMs, but I do think that we'll see in the services segment, whether it be in your part of the industry, FBO space. Valuations have never been higher. And so when you think about companies that are trading publicly, and the buyouts that are going on, there's just a ton of activity on the M&A front. And so if you're a business owner and you've ever considered selling your business, now would be the time to do so. Because I think that after we go through 2019, 2020 is going to be probably a lost year, and it may be a while before we have an environment that's as good as it is right now for a long time.
Great. Any more questions? If not, thank you.